What's going on, Moon Gang? Welcome back to another episode of Dumb Money with me, Matt. Let's talk about two of our favorite stocks. I'll be giving you a quick rundown of what's been going on with both GameStop and AMC, and then I'll be letting you know what I'll be personally looking for in both of these stocks when the market reopens tomorrow. So let's hop right into it. Both of these stocks, pretty good day. Both were green, so another win for Ape Nation. GME closed out the day at 300 flat, which was a gain of 7.14%, and AMC was up by 5 cents, which was a minimal gain, but still, any neutral day or positive day is obviously a loss for the short sellers. And don't forget, I don't know. It's been a while since I've been in a math class, but I'm pretty sure trading above $55 is still bigger than 1 cent. But I don't know. I'll have to check a calculator later. All right, let's hop into it. So I do want to start this one off with GameStop, just because it does have an earnings announcement tomorrow after the market closes on June 9th. So here's a look at its technicals. It's been doing very, very well ever since May 11th. In fact, ever since that low, we are currently up 119%. GME ever over the past week, now we're up over 20%, looking very, very strong. Yesterday, when I was talking about GME, I was really looking for a breakout and a hold above 300. From there, I was calling for a test of 348, 350. Today, we managed to hit a high of 344. That was good, but I'm still looking for that test and breakout from this high on March 10th. After that, I think there's a very real shot of coming to the top of this wedge just above $400. So that's what I'm still looking for. But beyond that, we still do have a strong fundamental driver, the earnings announcement. This was just posted today. GameStop stock sent higher by meme trading army ahead of earnings. The meme stock army, aka Ape Nation, is showing support for the OG of the 2021 retail trading movement, GameStop. Don't forget, this earnings announcement is after the market closes on Wednesday, June 9th. So we've been hearing a little bit about this company, Hype Equity. They kind of do stock market predictions based on social sentiment. I thought this was interesting. Talk on social media of call options on GameStop or a bet on the stock rising in the short term outpaced chatter for put options by a 5-to-1 ratio. Very, very interesting. The social sentiment for GME heading into this earnings announcement is a pretty bullish one. And then a little bit lower here, just for those of you who are like really into the specific numbers, here's what we're looking for going into the earnings announcements. We're looking for a net sales of 1.17 billion and an adjusted diluted earnings per share of a loss of 71 cents. All of these numbers are clearly an improvement on the numbers that were reported in the same quarter a year ago. Obviously, GameStop as a company has been fundamentally kind of pacing in a positive direction. They were very, very intelligent with using their at-the-market offerings to raise money and in a positive manner changed the trajectory of where the company was going. So once again, these are the expectations heading into the earnings call. Look for us to beat these numbers. And on top of that, beyond these exact numbers, I'm personally going to be kind of listening in to see if we hear anything exciting about what they're doing with this like transition into the e-commerce of esports sales. So I'm hoping we can get more commentary and updates on really how that's going for the company. Now, in terms of the exact numbers, to start today off, the short interest was 18.32%. At the end of the day, there was a slight increase. Between the return shares and the borrow shares, pretty much net neutral. Utilization sitting around 52%. Shares on loan currently 13.15 million. And the one thing I want to bring up here, and I'll also bring this up as we're talking about AMC, is if we look at the average duration of shares on loan, as in how long hedge funds have been loaning out shares that are at this point most likely short, because why would you continue to pay this fee without actually taking the short position? Look at this trend, up, and away. They've been betting against GME on average for the past 47 days, as in they've not only been losing money because clearly GME has had a really nice rally ever since late May, but on top of that, they're paying this cost to borrow. So the people currently betting against GME, I would argue, are strongly underwater. And as you're about to see, I would actually make the same argument for AMC. In fact, let me show you right now. Short interest 11.6%. After today, 11.46%. Net return of 1.1 million. Utilization 87%. Shares on loan 92. So if you take that net return into account, we're now down at 91. But look at this. The same thing. The average duration of shares on loan has been going sky high. Ever since March 24th, we've gone from 18 days to now 58 days. That is absolutely incredible. Now, I do want to kind of provide a little bit of clarification here. Shares on loan. Whenever you're taking a legal, legitimate short, you borrow shares from someone, then you take a short position. So shares on loan is highly correlated with actually shorting, but there is a theoretical practice in which you could rent the shares out, never take the short. Maybe you didn't see your opportunity and then you return it. So I just want to clarify, highly correlated with the actual short interest, the actual short shares, but not exactly the same. But anyway, I digress. They've been in this for 58 days. Look how incredibly underwater they have to be. AMC is currently trading at $55. Over the past week, it's a 71% gain. Ever since May 21st, it is a 356% gain. And if we look over the past 2 months, we're looking in the range of actually sub $10, right around that $10 mark. There's no argument to be made that on average, the shorts betting against AMC, against GME, the data tells us right here, they are seriously underwater. The price that they got in and took the shorts, they're getting burned by that. They're getting burned by us in the Ape Nation. And on top of that, don't forget that the cost to borrow fees add up every single day. And what's really moving against them, I would argue, like especially in the AMC community, every single day, the entire Ape Nation, that group of people supporting it, everyone diamond handing AMC, GME, it's just getting bigger and bigger. The longer this goes on, not only are the hedgies who are betting against us losing more and more money, but they're coming closer and closer to officially losing the fight because our community is getting to that point of critical mass that they're just hemorrhaging money. There's no way there's not hemorrhaging money right now. This is very much a dire situation. So we went over the technicals for GME where I was looking for that breakout. Basically, I want that test of 348, let's just call it 350 and a break from there and then going above 400. In terms of AMC, I just want to take a little bit more of a detailed view. Here's the 30-minute chart. Ever since this run up of last Wednesday when we had that crazy 95% gain day, we've basically been in a bullish pennant. A bullish pennant is when the stock is running upwards and then you form a triangle where you're seeing lower highs, higher lows. Another way to frame that is consolidation. That's how the stock market works. We go from periods of consolidation to expansion to consolidation to expansion. That's how the market ebbs and flows. Expansion, consolidation. We are waiting for this consolidation to end. It doesn't have to build all the way out. That's not like there's not a hard written rule that has to happen. So basically, I'm looking for this breakout. And the one thing I really want to zoom in on, of course, tomorrow I'm looking for this breakout above this trend line. But even today, we almost broke out and then we got rejected once again at $60. So from here, we have support, consolidation, a rejection, a rejection, a rejection, and another rejection. Clearly, whatever's going on at this $60 mark, people are really defending it, as in the bear camp does not want it over that, and thus far the bull camp has not developed enough momentum to break above it. So once we get above this trend line and have the official wedge breakout, I'm really looking like, to me, the breakout will be confirmed when we get above 60 and hold that, and from there then that opens up the gates to 68, 72, and I've already made a video discussing above 70, 75. That's when you're going to see the next like kind of movement of market makers really delta hedging against all what's going on in the options market. And I think that's when we could see like phase 2 of another massive volatile run that's similar to what we saw in early June. As of now, just remember, that's what I'm looking for. I'm not a financial advisor. I'm not a fortune teller. If you like what I'm saying, if you don't like what I'm saying, I still implore you to do your own DD, because at the end of the day, you are risking your own money. It's very important that you feel confident in your own trade. Overall, though, in my opinion, I strongly believe we are winning the battle and the war with both AMC and GME. I am very proud to be an ape, and I'm very proud to have both shares and call options on both of these companies. With all that being said, I would love to get your thoughts on both AMC and GME in a comment below. If you enjoyed this video and you want to help me out with that YouTube algorithm, it would be greatly appreciated if you could leave a comment, drop a like, and if you want to be a member of the Moon Gang, all you have to do is hit the subscribe button. If you don't want to miss any of my update videos like this or my live streams, go over that bell icon, click on it, and switch it to always, and you should be notified whenever I post a new piece of content. Until I catch you next time, from me and Chair, best of luck in the markets.